J-Blog, August 23rd, 2009. The market had a big bounce on Friday, which obviously came as a surprise to me. I didn't expect that, but then the market's been doing a lot of things I didn't expect lately. Market goes from overbought to very overbought, and maybe next week it'll go to massively overbought. Not quite sure about that. Anyways, we're looking at the New York Stock Exchange Composite Index here, which did break the highs of the 2 weeks before that on Friday. It was a massive white candle on good volume. No doubt about that. It's a strong move. The OBV looks good as well here, and everything looks like this market just wants to go higher and higher and higher. And yet, I'm still bearish. And why am I still bearish? I don't know. I'm just bearish. The technical non-confirmation I was talking about last week is still intact. We've actually made a higher high over here, yet the RSI has actually made a lower high. So from that point of view, the latest here is not being confirmed by one of the technical indicators, the RSI, that was the giveaway in 2007. What could this be? Could this be some short covering? A whole bunch of people had a stop set here, and as soon as this penetrated, lots of bears had to cover their shorts. Could be. As of late, that seems to have happened quite a bit for the last 2 to 3 years as technical analysis is becoming more and more prevalent. It seems to be that limits are exceeded just a slight bit and then potentially reverse. I imagine traders are getting used to the fact that they can run a resistance point and make some quick money here. So let's see if we get some follow through on Monday on this particular one. But there's really, from a technical point of view, this market looks like it really does want to go higher. And this market's saying that I am wrong. So, why do I stay bearish? I just don't know. I just am. Market is overbought. Market has been overbought. Am I going to cover all of my shorts at this point and go in on the long side at this point? I don't think so. Am I going to cover my shorts and stand aside until the market turns around and finally decides to go down? No, because my short positions are really relatively small. There's a minute exposure there, and I do have long positions, as I said before, so I am hedged from that point of view, but I just continue being bearish. A few things that what I do on Saturday and Sunday mornings is I read diverse newsletters. Here is one from US Global Investors. It's talking about the seasonality monthly performance, and it points out that September is traditionally a bad month for the market. So am I going to get long at the end of August, just in the beginning of September? No. Am I going to cover my shorts just before this statistical downturn on a heavily overbought market, an overvalued market? No, I am not going to do that neither. But obviously I am not making money at this point, which is troubling me. Housing markets, some new numbers came out. Here's a housing chart that talks about the home sales, and the bulls are very excited about this higher high that was formed on the last piece of information here. Yes, that's the number of houses bought. It doesn't tell us at what price they were bought, obviously, if we have foreclosures, and we also have a program in place that gives first-time home buyers an advantage. What is this? First-time home buyers $8,000 something something is like cash for clunkers. So basically, they're trying to uh, stimulate the market to move some stuff. This is from John Malden's newsletter. The last one, very good, very interesting. John Malden has a friend, John Burns, real estate consulting, who feels that the real bottom in real estate is going to be put in the summer of 2010. That sounds quite reasonable. I read the argument in the newsletter. Personally, sounds good. He figures that as soon as this first-time home buyers incentive runs out, which will be the 30th of November 2009, the market will put in another drop, because basically what we've done is we've pulled some stuff for where people were buying would have been buying in 2010, and we just pulled it forward. So he figures there's going to be another dip, which should work out nicely for the SRS position that I'm holding. So I continue being happy holding that for the time being as a hedge against a possible downturn. Going over to the again to the S&P 500, undeniable, we have a new higher high. It is troubling me. I continue thinking about what could I be missing? What does the market see that I'm not seeing? And the only answer I can come up with is liquidity. Liquidity, liquidity, liquidity. Banks have most likely been using all of the money that they've been given by the US government, which was enormous amounts of money, and rather than fixing up their own books, they probably dumped it right into the stock market and drove it up to new highs. And this is what we're seeing here. We're seeing almost 0% interest, liquidity, unlimited borrowing, and that will drive a market higher, no doubt about it. Could continue for a long time, or it could collapse at any time. It's actually an interesting book that I think every investor should read, and that is the memoirs of the reminiscence of a stock operator. Talks about one of the very early technical traders by the name of Livermore, and he is explaining how one has to basically prime the market in order to dump a whole bunch of stocks in an illiquid market. The first thing he did is he bought a whole bunch of things in order to get the buyers going. And so he bought some, and then the buyer started buying, and then he started selling his stuff. This could very well be what we're seeing right now, is that banks, having reached this point of stock market highs, now would like to liquidate their positions. So they're looking for buyers to basically buy these overpriced stocks. And once they pull out, again, this could drop quickly. I just do not want to be part of it. Well, I mean, I am part of it because I have some longs and I have the shorts to cover. So either way, the market goes up further and it's economic nirvana from here. I'm fine, I'm doing well. And if the market collapses and goes below the March lows, I am fine as well. So either way, I'm doing well. I didn't really do that much this week. I don't think I took one more piece of oil shorts when oil went to new highs, and basically I'm just sitting on the sidelines with my position established, and I'm quite happy there. So that's for today. Don't really have that much else to say. That's what I'm doing. Hope you guys are doing well. Make some money next week, unlike me. And yeah, all the best.